Hi everybody, welcome to the Parallel Systems broadcast. I'm your host Mike. Thank you for tuning in to tonight's episode, where I'm going to begin by sharing this article. You've probably already seen it. It's Michael Burry of Big Short fame. He's just bet 1.6 billion that the stock market is going to crash. Now that's their words, not mine. What it says in the article is that Michael Burry, and you'll remember him from the film The Big Short if you've seen it. Michael Burry was the guy who bet against all of the big banks, Deutsche Bank, JP Morgan, all the others during the 2008 GFC. So in the build up to that, he was betting against them because he understood that they had all of this toxic mortgage-backed securities, that it had been misrated. So he bet against them, and ultimately he was proven right, and he earned hundreds of millions of dollars because of that. So that made him really famous. They made that film The Big Short, and of course that introduced him to many people who otherwise wouldn't have known who he is. And he's making another big shot right now. 1.6 billion on puts on the S&P 500 and the Nasdaq. Now, this is more than 90% of Michael Burry's portfolio at Sion Asset Management. So that is a huge bearish bet. And this is from filings. So he hasn't come out and said this, but of course, all these companies have to do SEC filings. So this means that Sion Asset Management have made these bets at some point in the last, I think it's 6 months, but don't quote me on that. So ultimately, he could already be in profit on those puts. We don't know. So you have to take it all with a pinch of salt. Nobody knows what he's thinking. This is just from reportings. He could have sold those puts by now, and we wouldn't find out till the next report. But I think it's significant still. Burry has a good track record of understanding when the markets are starting to downturn. He's a good bearish investor. He understands that there are hidden risks in the market. And of course, today, the risks really aren't that hidden. We've seen a lot of them this year. We've seen, well, do we have to go through it again? We've been through it so many times. We've seen regional banks collapse. We've seen interest rates rising at record pace. Started to see the effects of quantitative tightening in different asset classes. But really, we are on that precipice. We're waiting for the great unwind to truly begin. And I've always said I think it's going to happen going into autumn, winter. Now, as part of tonight's show, I thought it'd be a good idea, and maybe fun too, to actually have a look at how other famous investors, including Burry, think about gold as an investment. So let's go down this track. Let's see how big investors think about gold, because I'm somebody who says that it is one of the best ways to protect yourself going into a crash. But not everybody agrees with me. So let's start with Bill Maher. Now, oh, sorry, not Bill Maher, Mark Cuban. So let's see what he's got to say.
I'm rooting against. I want Bitcoin to go down a lot further so I can buy some more, right?
Wow.
Because if you ever bought gold, what do you think about gold? What do you think about gold?
I think it's good. I think it's good when you're trying to get laid.
Right, but no, not when you're wearing gold. Yeah, come on, baby.
No.
Like, would you buy gold as an investment?
I have gold.
Okay.
Everybody likes to.
You know what? If you have gold, you're dumb as fuck.
Wow. Wow. That's quite a thing to say for a man who actually invested in Dogecoin. So he said if you buy gold, you're dumb as, and I'll leave the rest of it for you to say in your own mind. Now let's continue this one, because he says some other cracking lines here about gold. So let's carry on.
Well, I mean, it never. It's a small part. It's like a hedge against everything else.
It's a hedgement against everything, but
yes, it is. Would I be all in gold? No.
No, but it's not a hedge against anything, right? What it is a store of value, and you don't own the physical gold, do you?
No, of course. Well, I don't. Who the fuck knows?
So what he's talking about actually when he talks about gold is an ETF, because he says you don't own the physical gold, do you? And Bill Maher, I don't know, he looks like he's stoned. So let's ignore what Bill has to say.
What I know is that it never goes away. It's always worth something. You can always sell it.
Just like Bitcoin. Gold is a store of value, and so is Bitcoin.
That is an apt analogy.
Because you don't hold the gold.
But the world is not run by gold.
No, it's not, and it's not run by Bitcoin either.
I mean, I can't deny that.
Now, I'm a little bit suspicious when you have people like Mark Cuban talking about Bitcoin and pumping Bitcoin, but also being derogatory about gold, because I would like to think that if you understood Bitcoin, you'd also understand gold. And I think this lends credence to my theory, and it's just my theory, that Bitcoin is being used by the establishment to corral people into an asset that they can control whilst the gold gets shifted around to different central banks in the build-up for the big rug pull. That's just my take, and if you want to learn more about it, you can listen to the Parallel Mike podcast episode number 20, which is Who Really Created Cryptos, and I did that one with Ian Ferguson, and I go into it a little bit more. But I think Mark Cuban is a part of the establishment. He owns a massive football team called the Dallas. Is it the Dallas Cowboys? Or is it, sorry to my American listeners, I know nothing about American football, but he had cryptocurrencies actually sponsoring his American football team. And I think that's telling. That tells you about the kind of person he is. He's all in on the modern day Ponzi type assets, but it seems to me like he doesn't truly understand gold. Or if he does, he has a vested interest or maybe even an order to try and push people away from it.
It is based on actually mining something, which is crazily, that's why we got off the gold standard, because it's crazy to hook a currency to what you can find in the ground.
But you and your ownership, you don't own the gold bar. And if everything went to hell in a handbasket and you had a gold bar, you know what would happen? Someone would beat the fuck out of you or kill you and take your gold bar.
Then they could use the bar to hit me.
To hit somebody, and that's it. You're not gonna. What are you gonna do? Shave a little piece of gold so someone waves it?
I mean, look.
It's useless.
Okay, so I think we've seen enough of his take there. And other things that he said on gold is a religion. And he also says to people in another interview, I think actually I've got a little clip of it here. Let's play this one as well.
Investing in the Shark Tank, but outside of the tank, where do you think are some of the safest bets for your money right now?
Safe? I mean, you got to look at your own financial situation. You know, if you need safe, just put the money in the bank. 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 Just sleep well at night. There's really nothing wrong with that. But probably the best investment you can make is paying off your credit cards, paying off whatever debt you have. And the reason for that.
Okay, so he thinks the best thing to do is keep your money in the bank and pay the bank back your debts. Now, okay, you could argue that paying off your credit cards is a good idea because of the interest rate on it. However, it's interesting that both of the things that he suggests are in favor of banks. Now, let's just skip forward a little bit to his views on gold.
My next question on gold, up 2.5% for the first quarter. I know in the past you've seen it as a speculative bet. How do you see it today?
I hate gold. Gold is a religion. There's some fundamental value to gold, but everything else, it's a collectible. I see gold and Bitcoin as being the same thing.
Well, hate is a strong word.
Okay.
So the miners too, all of gold, the whole gold spectrum.
Individually as people, I've heard they're great people. But as an investment, okay, you're right. Hate is not strong enough. Hate with extreme prejudice as an investment.
Oh, gosh.
No offense to Mark Cuban, but I don't think he knows a lot about gold at all. And the reason for that is he says it's a collectible. What he doesn't understand is that gold has actually been money for thousands of years. And ultimately, when you have a fiat system, you need to weigh that fiat up against something of value. And we do that against gold, and we still do it against gold. That's why central banks are buying gold. So if it was a collectible, what he's suggesting is that all of the central banks on planet Earth, China for decades, Russia for decades, they're all getting collectibles. And if you call it a collectible, you're putting it in the same line as, let's say, trading cards, baseball cards, Beanie Babies. Now, I don't see gold in that light. What I actually see gold as a natural material that comes from nature's economy that requires man's finite resources of time and energy to get out of the ground, and therefore that energy gets trapped in the resource, because to get it you have to expend that time and energy, which are finite resources. We only have so much of it before we say goodbye, sayonara to this place. So when we expend that, we need to trap that in something. That's where value comes from, and that is gold. Now, of course, in a fiat system, we're creating money that has neither time nor energy put into it, besides maybe the flick of a switch to turn on the printer. That is the problem. The fiat system doesn't work because it creates fiat money. Now, Mark Cuban wouldn't understand that because he has 3.9 billion of those pieces of paper, but make no mistake, he does understand what real assets are and what Ponzi scheme paper assets are, because he owns lots of real things. He owns mega yachts, he owns thousands, hundreds of thousands of hectares of land, he owns a football team. So make no mistake, if the system crashed tomorrow and everything went in this Ponzi scheme, I'm pretty sure Mark Cuban would be okay. Now, the average man and woman who followed his advice and kept their money in the bank in the Ponzi scheme, would they be okay? No, they would lose everything because most of those people have a mortgage. Most of those people have all of their savings in paper assets, and they don't have assets that they could then use to reestablish themselves in a new currency system. So ultimately, he doesn't understand the rationale for gold, and therefore I don't think Mark Cuban is a good person to follow if you want to survive in the crises. Okay, let's move on to another investor that really doesn't like gold, and this one's one of the most famous investors in history. It's Mr. Buffett sat on his tuffet drinking his can of Diet Coke. And you can see next to him there's Charlie Munger, who looks like he has been dug up and catted out onto that stage. In fact, he actually looks pretty good there compared to how he looks now. They're both about 2,000 years old. And Warren Buffett is the king of the Ponzi. That's what I call him because ultimately he is the fund manager for Bill Gates. He's the fund manager for all of these big crooks and tyrants. And they are all in each other's pockets, gaming the system. They're all investing in things long before the narratives unfold. So they have insider information. And when they make a bet that goes wrong, they get the system to bail them out. They don't lose like you and I do. They actually get the system to reverse course. And they can do that because they have power. They know all the politicians and the politicians know them. They manage the money for them. So I'm not a fan at all. But let's hear what he's got to say about gold because it's kind of irrelevant how crooked this old guy is. But it is relevant what he has to say about gold. Let's have a listen.
Do you think that gold can be considered a viable investment alternative to paper currencies?
Yeah, we're not enthused about gold. People historically have felt that was the first refuge from a currency that was going to be decline in value. But, you know.
Just listen to this pig. He's at the Berkshire Hathaway annual meeting and he sat there eating. I mean, he doesn't like gold, but he sat in like chocolate coins that have gold wrappers. Look at the size of that bag, and he's just sat there in front of the mic going. Yeah, I actually did hear him do a snort. So yeah, this guy is quite repulsive, and you know it's funny because I actually remember reading Warren Buffett's biography quite a few years back, and I think I put that book down after 100 pages or so, maybe even less, because I was so repulsed by his character just reading the book about how he had, I think he's got two wives. He's got a wife and then he's got like kind of a mistress, and he hasn't divorced his wife, so he spends half of his time with his wife and his mistress, and he just doesn't strike me as a man of good character. And like I said, I learned a lot more about him in the interim. So let's continue. If you can bear listening to him chomping and slopping and sounding like a pig at a trough.
You know, so's a barrel of oil, so's an acre of land, so's a piece of Coca-Cola, so's See's Candy. See's Candy, if the dollar goes down 50%, we will be selling See's Candy for double the present price. We'll be getting the same real price for See's Candy. People will work the same number of minutes or hours per week in order to buy a pound or a 2-pound box of the candy. So we would much prefer some asset that is going to be useful, whether the currency is worth what it is today or 10% of what it is today, or whether people are using seashells.
Okay, I'm going to stop him there because I don't think we want to listen to him any further. It was getting all a little bit lame, and he didn't really give a genuine answer. He compared gold to the bag of sweets. He compared it to the can of Pepsi or Coke on his table. And ultimately, again, I think he was giving a scripted answer. I think he's made and told to ultimately tell people that gold is a bad investment because he is the king of the Ponzi. He is the poster boy for the Ponzi. When people think of the S&P 500, ultimately when we look back on this period of history and we look back at the investors who symbolized it, I think Warren Buffett will be right up there at number one. So yeah, he is the king of Ponzi, and his job is to keep people in the dollar and to keep people in the scam system. So he would say that, and he can't say anything else. He literally can't. Now, if you go back through the history of Berkshire Hathaway, there was a period where he bought 130 million ounces of silver. And I actually did a deep dive on this back in my archives. If you go back, really find the Parallel Systems broadcast. I did do an expose on this, and I actually uncovered some information on that I don't think anyone else had ever discussed, or at least I've never heard it discussed because it was my own research. So you can check that one out if you want to hear more about it. But like I said, ultimately, again, Warren Buffett is just a shyster, a mouthpiece for the Ponzi pirates, the people who created this scam system. Yes, he was a successful investor, but he also would have been wiped out multiple times where he not a part of the establishment. So let's move on. So Warren Buffett, yes, again, not really a serious take, not one that I can take seriously personally. Maybe you do. Let's go back to Michael Burry. So Michael Burry was the person who was in The Big Short, who I mentioned at the start. So does he understand gold? Does he get it? Well, it says here that in 2022, Michael Burry actually recommended gold. And what he did was when FTX started to collapse, he said this in a tweet. Long thought that the time for gold would be when crypto scandals merge into contagion. So essentially he was saying back then that now is the time for gold. Similarly, if we go back to 2010, he was buying gold and agricultural land, which is really interesting because both gold and agricultural land are non-correlated to the Ponzi scheme. So when Warren Buffett is telling you to invest in the Ponzi scheme, Michael Burry is actually somebody who understands that you need non-correlated assets too. So these are for the times when the system is actually fragile. Now, another person who really does understand gold is actually Ray Dalio. And I've got a clip here, and I think Ray Dalio puts it best.
Gold is like cash. It's an alternative version of cash. So over long term, it's not the best investment. Over long term, it's a little bit better than cash over long term. It is however, when you're having a monetary crisis, when you have a fiat monetary system, and you have the need for money, debt is a promise to deliver money. Right. So if you look at each of those devaluations that have taken place, March 1933, President Roosevelt closes the banks and then opens them and says you can get your money. And then they broke the link with gold. And so the history over that period of time is that money can be produced. Gold is somewhat limited. It's an effective, it's an alternative that should be part of everybody's portfolio, but not in a big way.
Okay, so that is an old clip of Ray Dalio when it comes to gold. And he's saying there that he thinks every portfolio should have some gold, just not a huge way. And the reason he says that is because if you backtest a gold portfolio, if you was only in gold and you backtested that over 100 years, you would, of course, not do as well as if you had other assets in there too, because it's not really a growth asset. But I do think that he puts it quite well when he says that gold is like a currency. It's like a currency, although it's a hard money. So whilst currencies have no backing, gold itself is backed intrinsically because it comes from nature's economy, yada, yada, yada. We've explained this before. So he does understand it, and he actually says the key part, which is the bit that Warren Buffett fails to mention, that Bill Maher and Mark Cuban don't understand in that little interview. And what I would guess Michael Burry does understand, and that is that when you have fiat money, once you have a crisis, when you have a crisis of the monetary system itself, and that Ponzi scheme is going to collapse, which it is, then you need an asset that can take you out of the system entirely. No counterparty risk. And of course, that is why gold is so important. That is why people are turning to Bitcoin too. It's the exact same investing theses. It's because they realized they need to get out of the system entirely. Now, of course, we all have different views on different assets, but ultimately, that is why gold will always be an extremely important asset. Now, again, if you look at someone like Warren Buffett, does he need to get out of the system entirely? No. Does he have a ton of assets, real assets? Yes, of course they do. They have everything they need to survive for another 1,000 years if they have to, but they are going to tell you to stay a part of the system. They're going to tell you, like Mark Cuban did, to keep your money in the bank. So is your government, so are your financial advisors, your mortgage broker. Yep, they were telling you to get a variable rate mortgage back in 2020 when you was at the lowest interest rates in history, because these people don't understand the system that they are a part of, or if they do, they have willful blindness, willful ignorance, because that's how a Ponzi scheme works. Now, like I said, these people are fine. They'll get bailed out no matter what. They'll survive no matter what. Their children will be billionaires, even if the system comes down, because they've got so much land. I mean, Bill Gates, look at all the farmland he's got. Why is he buying farmland and real assets? The same with Warren Buffett, one of the largest landowners in America. Why? Why land? Why doesn't he talk about land when he sat there talking about investing? He doesn't want to talk about real assets. He wants to talk about the Ponzi system, and he wants you investing in it to prop up the share prices that he's going to gain, and he's going to leave you as the bag holder. Okay, let's go to one final person, and this time it's my favorite billionaire investor and fund manager, and that's Howard Marks. I think Howard Marks is the smartest guy in the room. So what does he have to say about gold? Well, here we go. He says, there is no intelligent way to invest in gold. A professional tries to invest by looking at a company and figuring out how much money it makes and how much money it is going to make in the future. Then he figures out what the company is worth and compares the current price to the value. So that's classical value investing. But you can't figure out what gold is worth. It doesn't really have much practical use, and it doesn't produce an income. You might say gold at $1,327 per ounce is a good buy because it's a store of value, it protects you against inflation, and it gives you comfort in times of panic. So you argue that's a good reason to buy gold today at $1,300. This article, of course, was written many years ago. So you argue that it's a good reason to buy gold today at $1,300, but the trouble is that all those things were true also when gold was at $1,900, and the person who bought it there has lost a third of their money. Therefore, you can't invest intelligently in gold. There is no way to translate those virtues into a dollar figure. By the way, if you take the word gold and you take away the letter L, then you have God, and it's the same analysis. Either you believe in it or you don't. So that's an interesting take. And like I said, Howard Marks is my favorite investor to read. I think his book, The Most Important Thing, is the best book on investing ever written by a long way. I read it all the time. I go back to it time and time again. But ultimately, he has a different opinion on gold to me also, because he says that gold cannot be valued. Now, when it comes to that question, do you think gold can be valued? I actually think it can be valued in comparison to fiat currencies, because that is ultimately the role of gold. The role of gold is money, and therefore it can be used to value fiat monies, and fiat monies can be valued in gold. So we can see how much they are inflating those currencies by looking at the monetary base compared to gold, for example. If you do that, then what you'll find is that gold should be valued at something like 50,000, 60,000. So ultimately the role of gold is to tell us if they're debasing the currencies. That is all. That is the role. It's money, pure and simple. Doesn't make it an investment, but it can be an investment at different times in history, like the 1970s, for example, when we had really high inflation and currency debasement. If you'd have had your wealth stored in gold, then you would have been protecting yourself. Now, the reason gold went down from 1900 to 1300, so this was after the 2010 all-time high, and it went down. The reason for that is because it had run away in price. Because if you went back to the early 2000s, gold was around $200 an ounce, so the price had gone up rapidly. So just like stocks, just like the stock market, you have times when the asset becomes overvalued. Now today, what we have to look at is gold's value in comparison to the system itself that many of us believe is not going to survive another decade. And we can see that. We can actually see that they themselves do not believe the system's going to survive. That's why they're creating a new system, central bank digital currencies. That's why they're unrolling crises left, right, and center and talking about a great reset. What's it all about? Of course, it's about a monetary reset. That is where it all comes from. Now, why is China? Why is Russia? Why are all these nations stocking up on gold? Why are central banks buying gold at a faster rate than ever before in history? The biggest purchases in history in 2022. Well, of course, that's because they see a value in it. They know that as the fiat monetary system collapses, they're going to need the real money, something with intrinsic value that they can restart, reboot the system with once this one has come down. Now, interestingly, that is not all Howard has to say about gold, because he did update his opinion later on, and he wrote in one of his fantastic Oak Tree Capital investor newsletters, which you can find on his website. He actually calls them memos, and he spoke about gold in one of them in 2010. And he said that gold serves as a reliable store of value, especially in challenging and uncertain times. It's a hedge against inflation since its price rises in sympathy with the general level of prices. It exists without the involvement of man-made constructs such as government, and it's desired and accepted around the world and always has been. So I think Howard Marks probably realized along the way when he saw what was happening to the system, and bearing in mind he lived through 2008, that actually it does make sense to have something of a diversifier that can take you out the system. Now remember, we're talking about billionaires here, so they don't worry about losing everything in a crisis like you or I. They worry about losing their clients' money, but they are certainly not going to go under. But what normal people worry about is actually losing everything. So therefore, they have a much more vested interest in having something that can protect them and retain its value no matter what. And of course, that's why we look to gold. So what is my take on all of this? Well, you know my take on all of this. I think gold is ultimately a bet against the system entirely. So if you see the system falling apart, if you see a system that no longer serves you, if you think the banks are trying to put you on the hook, if you're seeing them set up for bail-ins, if you're reading that legislation, if you're seeing that happen in places like Malta and Lebanon, for example, if you are thinking that perhaps this debt-ridden system that has inflation now in double digits, that has been hanging on by their fingernails since 2008 and took extraordinary measures just to survive, creating bubbles in pretty much every asset class out there but gold and silver. If you think that that system no longer looks stable, that is the role of gold. The role of gold is to enable you to step out of that system, to take a breather and say, I'm going to just sit this one out. I don't want to have 100% of my net worth tied up with that I just described. So I think these billionaire investors have a very different outlook purely because they never have to worry about total financial loss like the everyday man and woman does and should. They don't have to worry about things getting so bad that they can't afford to feed themselves, or that they have to then accept some kind of government-backed tyranny, CBDCs, UBI, and all the rest of it that we're seeing unfolded now, because they know they can always just whisk themselves away to a private island or a bunker or whatever the hell these guys have. So what we're trying to do is to not be in that situation, and therefore we need something. We need an alternative that allows us to go out of the system because it has no counterparty risk. And once it has been extracted from the system, once you've taken it away from it, there is no way to track it, trace it, control it. It's gone. It's ghost. Well, that is exactly why people turn to gold. Okay, so I'm going to leave it there for tonight's show, everyone. And I'm going to leave the last words not to an investor, not to a person, but to a chart, because I think this one says it all. The reason people go to gold is because time and time and time again throughout history, governments and central banks have done the same thing. When they have the power to print the currency, they always exploit it. They use it to enrich themselves, to gain political power, to install themselves as heads of all industry, all commerce, to buy up all of the assets, and they destroy the wealth of the everyday man and woman and citizen. That is what they do every single time. Then they repeat the cycle again and again and again, each time coming out with more assets, more power and more control. And ultimately, that is how tyrannies arise, because they repeat that cycle for hundreds, if not thousands of years now. And that's what's taken us exactly to where we are today. So that's why we protect ourselves in gold, in silver, in lettuces, in whatever it is that you think can protect you from what comes next, because this is the cycle that we've been living through, and history is very, very clear on this one. All fiat currencies eventually go the way of the Weimar German mark. Now, I'm going to leave it there, but if you have not had enough, if you're thinking, no, I've only just got started, Mike, I've only just settled down, I need another episode, well, you are in luck. There is a new episode of the Parallel Systems broadcast that is premiering right now. However, it's premiering over on my Patreon. It's a Patreon-only episode. It's something that I put out there to give my patrons some more access to me and the channel. And this one is all about protecting ourselves going into the coming crisis. And I'm discussing risk management, one of my favorite topics. And we look back at the 1929 stock market crash, and we try to draw some lessons out from that in terms of risk management. So if you're interested in seeing that one, you can find it over on my Patreon. If you sign up to my newsletter, then you will also be able to find out how I am managing money going into this crisis. I'll tell you what I'm looking at when I see good value in the markets and when I'm putting my own money to work. And I think collectively we're going to have to put our heads together, because I think this crash is coming and there are going to be big opportunities during it, but we have to know when to buy, when to go back in. Similarly, we have to be positioned well going into it. So if you're interested in that, you can check out my Patreon. If not, I will see you in the next one. As always, have a fantastic week, and I'll see you on the weekend for a live stream.